Hey everyone, happy Christmas Eve. While most folks are probably settling in with some hot cocoa, the financial world, well, it never really takes a break. So we're here to bring you a rundown of some of the interesting stories making waves today.
Always something happen, all right.
Always. So first up, we've got Walmart finding itself in a bit of legal hot water. The Consumer Financial Protection Bureau, the CFPB, is suing them over their Spark Driver program.
Yeah, that's the program where they use a platform from a company called Branch Messenger to handle all those payments and financial stuff for their gig drivers.
Right, and the CFPB is claiming that this whole setup essentially force those drivers into accounts loaded with fees.
Yeah, over $10 million in fees, according to the CFPB. And they say that drivers were misled about getting paid the same day and then faced all these roadblocks when they tried to access their earnings through other means.
So basically, the CFPB's argument is that this Spark Driver program was kind of a raw deal for the drivers.
That's the gist of it. In this case, it could have ripple effects throughout the gig economy. We're seeing more and more scrutiny on how these platforms treat their workers, and this lawsuit could set a precedent for other big players like Uber and DoorDash.
Interesting. So how are Walmart and Branch Messenger responding to all of this?
Well, they're both pushing back pretty hard, denying the allegations. Branch Messenger is even going so far as to call the whole thing a publicity stunt by the CFPB.
But the market, it seems to be taking this seriously. Walmart's stock took a dip after the news broke.
Yeah, down over 2%. For a company as massive as Walmart, that's a pretty clear sign that investors are a little spooked.
Definitely something to keep an eye on. Now, moving on, we've got Symbotic Inc., that robotics and automation company, and they're dealing with a class action lawsuit.
Yeah, this one involves investors who bought stock in Symbotic between February 8th and November 26th of this year.
What exactly happened with Symbotic? Why are investors suing?
So, Symbotic came out and admitted to messing up their earnings reports. They had these cost overruns on some projects, and it ended up throwing off their financial statements for a good chunk of 2024.
So those revenue recognition errors they mentioned in the news.
Exactly. And, when a company messes up its financial reporting, that erodes trust with investors.
Makes sense. Investors need reliable information to make informed decisions.
Absolutely. And that's a big reason why we see these class action lawsuits when things go wrong. Investors feel like they've been misled.
And in Symbotic's case, the market reaction was pretty dramatic, right?
Oh, yeah. Their stock plummeted more than 35% in a single day after they announced those errors.
Wow, that's a steep drop.
Yeah, not a good look for them. And you know what? Symbotic isn't the only one facing legal trouble from investors.
Really? Who else is in the hot seat?
A bunch of other companies, actually. Marqeta, Air Test Systems, Mineric AG, Chipotle Mexican Grill.
Chipotle? What are they getting sued for?
Yeah. Well, this one's a little different. It's about portion sizes. Some investors are claiming that Chipotle wasn't being straight up about inconsistencies in their portion sizes.
You mean some customers felt like they weren't getting what they paid for?
Right. And the lawsuit is basically saying that Chipotle downplayed this issue and its potential impact on their costs. Because, if they have to increase portion sizes to keep customers happy, that eats into their profits.
Makes sense. Okay, so besides Chipotle, who else did you mention?
Let's see, we've also got Kyverna Therapeutics, AstraZeneca, and TMC, the metals company, all facing class action lawsuits from investors.
Wow, so what are the allegations against those companies?
It's a mixed bag, really. Kyverna Therapeutics, they're accused of withholding some negative data about one of their clinical trials during their IPO.
Their initial public offering, when they first started selling stock to the public.
Exactly. So investors are saying they didn't get the full picture before buying in.
And what about AstraZeneca?
They're facing some legal heat in China, specifically allegations of insurance fraud. And TMC, the metals company, well, they're being accused of having some pretty shoddy internal controls over their financial reporting, which led to errors and forced them to restate their financial statements.
It sounds like transparency and accountability are becoming increasingly important for companies in today's market.
Oh, absolutely. Investors are demanding it. And when companies fall short, well, they're likely to face consequences.
So shifting gears a bit, let's talk about a major real estate deal that just went down. Talinvest Capital, a real estate firm, secured a hefty loan for Rialto Capital Management.
Yeah, this one's interesting. It's for a portfolio of self-storage properties.
Self-storage, you mean those places where people stash all their extra stuff?
That's the one. And this deal's pretty big, an $80 million loan to finance 8 self-storage properties across the Southeast. Florida, South Carolina, Georgia, that sort of area.
So are self-storage facilities becoming a hot investment?
Seems that way. They're popping up everywhere these days, and for good reason. People are accumulating more stuff than ever before, and they need somewhere to put it all.
Plus, I imagine those rising housing costs aren't helping. People are downsizing and needing extra space for their belongings.
Right, exactly. And then you've got the whole trend of people being more mobile, moving for work or whatever. So, yeah, the self-storage industry is definitely on the rise.
Makes sense. Now let's talk about something a little different. The long game of investing and the power of compounded returns.
Always a good topic.
Some recent reports highlighted some pretty impressive gains for investors who held on to certain stocks for the long haul.
Yeah, those reports really drive home the point that time is your friend when it comes to investing. Patience and consistency can really pay off.
For sure. They mentioned Marathon Petroleum, for example. $1,000 invested in them just 5 years ago would be worth over $2,000 today.
And that's not even considering any dividends they might have paid out. It just shows that even in sectors that aren't known for explosive growth like energy, you can still see solid returns over time if you play the long game.
Right, and they also highlighted Fluor, an engineering and construction company. $100 invested in them 5 years ago would now be worth almost $280.
Yeah, that suggests that infrastructure spending could be a decent long-term bet. With all the talk about rebuilding and upgrading infrastructure, those companies involved in those projects could see some nice gains.
Interesting. So what about some even longer-term examples?
Oh, it gets even more impressive. $1,000 invested in graphic packaging holding 15 years ago would be worth over $7,500 today.
Wow, that's a seven-fold increase.
It is. They make packaging materials, not the most exciting sector, but clearly it's been a consistent performer over the years. And then you've got Iron Mountain, a data storage and information management company. $1,000 invested in them 5 years ago would be worth over $3,300 today.
Iron Mountain. They've definitely benefited from the whole data explosion and the need for secure storage.
Oh, absolutely. They're riding a major technological wave, and it's paying off for their investors. And lastly, we can't forget about Aflac,
Aflac, the insurance giant.
the one and only. $100 invested in Aflac a decade ago would be worth over $330 today. It might not have the flashy gains of some tech stocks, but it's been a steady and reliable performer for investors.
All these examples, they really underscore the importance of having a long-term perspective when it comes to investing.
Couldn't agree more. It's not always about chasing the latest hot stock. It's about finding companies with strong fundamentals and the potential for sustained growth over time.
Patience and discipline. Those are the keys to building wealth in the market. Now, those are just a few of the interesting stories we've got for you today. Stay tuned for part 2, where we'll dive a bit deeper into some of these topics and explore what they mean for you and your investments.
These long-term stock performance examples, they really are a good reminder that a slow and steady approach can really pay off big time in the market.
No doubt about it. It's easy to get caught up in all the hype, with the short-term market swings and everything.
Yeah.
But having that long-term perspective, that's key for building real wealth.
Exactly. And before we move on, I wanted to circle back to those class action lawsuits we were discussing earlier. It's important to remember that those can be pretty complex and often take years to actually resolve.
That's true. And there's no guarantee that the plaintiffs will win.
Right. And even if they do win, the payout per share can be pretty small.
So investors should keep in mind that these lawsuits, they're not necessarily a quick path to riches.
Not at all. It's more about holding those companies accountable and maybe recouping some of those losses.
Right. Makes sense. Now, speaking of accountability, I wanted to dig a bit deeper into those allegations against TMC, the metals company. Their situation really highlights how important strong internal controls are for any publicly traded company.
It's definitely a key point. So what do we actually mean by internal controls in this context?
Well, I guess it's all about having those checks and balances in place, right? To make sure that a company's financial reporting is accurate and reliable.
Exactly. Think of it like a set of rules and procedures that are designed to prevent errors, fraud, and basically any other financial shenanigans.
So in TMC's case, the lawsuit is claiming that their internal controls were weak, which led to those misclassified transactions and ultimately forced them to restate their financials.
Precisely. And that lack of control, it can really erode investor confidence and quickly.
Because it raises those questions about the company's management, right? Their
Mhm.
competence and trustworthiness.
Exactly. So I wonder if this whole wave of lawsuits will push other companies to review their own internal controls.
Yeah, it wouldn't be surprising. Maybe tighten things up a bit.
I think it's very likely. These lawsuits serve as a wake-up call for the entire market. Investors are making it clear they demand transparency and accountability.
Definitely a message companies need to hear.
Mhm.
Now, how about we switch gears and talk about something a bit more festive, huh? A major real estate deal just closed.
You mean the $80 million loan that Talinvest Capital secured for Rialto Capital Management? Yeah, that's an interesting one. All about self-storage
Oh,
facilities.
yeah, that's right. That sector's been quietly booming for a while now, hasn't it?
It has. And for good reason, too. People just have more stuff than ever these days.
Well, you see those self-storage buildings popping up all over the
For
place.
sure, people need a place to put all their extra stuff. Plus, things like rising housing costs and people moving around more for work, you
Right.
know, that all contributes to the demand for storage space.
Makes total sense. So this loan, that's for a portfolio of 8 self-storage properties across the Southeast, right?
Yep. Florida, South Carolina, Georgia, all those places that are seeing tons of population growth.
And that population growth, that's a key factor driving that self-storage boom, isn't it?
Oh, absolutely. More people means more stuff. And more stuff. Well, that means a greater demand for those storage units.
It's amazing to see how those big macroeconomic trends actually play out in these very specific real estate sectors.
It's all connected. Now, before we wrap up, I wanted to circle back to that topic of long-term stock performance. We were highlighting those impressive gains earlier.
Right, but it's important to remember that past performance doesn't necessarily guarantee those same results in the future.
Exactly. Investing, well, it always comes with some level of risk, and there are just no guarantees.
True enough.
Yeah,
But those examples we talked about, they do illustrate the potential rewards of being patient and having that long-term investment strategy.
I agree. Investing, it's not about getting rich quick. It's about building wealth steadily over time.
Solid advice. So that's it for part 2 of our Christmas Eve financial news roundup. We've covered quite a bit today, from lawsuits and investor concerns to those booming self-storage facilities and the whole power of those compounded returns.
Definitely a busy day in the financial world, even with it being Christmas Eve.
That's for sure. So be sure to stick around for part 3, where we'll be sharing some final thoughts and insights about what all of this means for investors like you. All right, so as we wrap up this Christmas Eve financial news roundup, what are some of the key takeaways for our listeners?
Well, I think one of the biggest themes we've seen today is trust, and transparency in these financial markets. Whether we're talking about companies accurately reporting their earnings or just being upfront about those potential risks, investors are really demanding accountability.
That's a great point.
Yeah.
And we saw how that played out in that wave of class action lawsuits, right? With investors taking legal action against those companies that they felt, well, misled them. And it's not just about those legal repercussions either,
Right, because those situations can really do some serious damage to a company's reputation, and that can make it harder for them to attract investors down the line.
for sure.
Reputation, it's everything in the business world.
Yeah.
And in today's world where, everyone's connected, that negative news, it just spreads like wildfire.
It really does.
So companies really need to be proactive in building and maintaining that trust with their stakeholders.
Absolutely. Now, another takeaway, I think, is that this financial world, it's always evolving. Look at the self-storage sector, for example.
Oh, yeah, that's a good
An
one.
industry that's quietly been booming,
Mhm.
all thanks to those shifts in demographics and those lifestyle trends,
It's true.
shows that there are always opportunities out there for those savvy investors who can really spot those emerging trends.
Couldn't agree more. And it's not just about spotting those trends, though. It's also about, really understanding those underlying forces that are actually driving them.
Right.
Like in the case of self-storage, it's things like population growth, urbanization, and the rise of the gig economy. All of that's fueling that demand.
Really interesting. So as we head into this holiday season, and look ahead to the new year, what's your advice for those investors out there who want to navigate these complex and always changing markets?
That's a good question. I'd say stay informed, do your research, and don't be afraid to ask questions. There's a ton of information available, online and through financial advisors. Take the time to really educate yourself about those different investment options and understand the risks that come with them.
That's great advice. And remember, investing, it's a marathon, not a sprint, right?
Exactly.
Don't get caught up in the hype of those short-term market swings. Focus on building that diversified portfolio that really aligns with your long-term financial goals.
Couldn't have said it better myself. Patience and discipline, those are the keys to building wealth in the market.
For sure.
And, the best investment you can make, it's in yourself. Continuously learning and growing that financial knowledge, well, that's going to pay dividends for years to come.
Well said. Well, on that note, I think we'll wrap up our Christmas Eve financial news roundup. We hope you found this overview informative and maybe even a little insightful.
Definitely.
We wish you all a very happy and prosperous holiday season.
Happy holidays, everyone.